Students, so let us continue again with our next topic. Today we're going to discuss about interest on capital at first, and then we will discuss a new topic, which will be guarantee of profits. So let us begin. The first of them, let's see which question we are about to do. It says X and Y are partners sharing the profits and losses in the ratio of 2 is to 1, with the capitals of 50,000 and 30,000 respectively. We have to show the distribution of profits in each of the following alternative cases. So the first case, it says if the partnership deed is silent as to interest on capital and the profits for the year are 9,000. So when the partnership deed is silent, then we do not give interest on capital. So in this case, which kind of an account will we make? We have to show the distribution of profits. So let's make the P&L appropriation account. This is question number 34, I guess. Yeah. So solution 34, P&L appropriation account. The debit, the credit side, we are saying it has a profit given to us. So the profit given is 9,000. So I will write by P&L account 9,000. I do not have to give any interest on capital because the partnership deed is silent. So what will I do? I will just divide this between my partners in which ratio 2 is to 1. So on the debit side, I will write to profit transferred to, and the first is A and B, right? No, X and Y. So X and Y in 2 is to 1. And 9,000 into 2 divided by 3, which comes out to be 6,000. And for Y, it's going to be 9,000 into 1 divided by 3. So 3,000. Okay. This is our total, which comes on both sides. Let's see our answer. The first one says profit of X is 6 and Y is 30,000. So that is correct. That is what we have done. So this is our first solution. Let's try part 2. Let's first copy this so that we don't have to keep writing. And we'll rub out and use for each and every situation. Let's name that as part 1. So the first is correct. That's correct. So 34.1. Let's come to part 2. It says if the partnership deed provides for interest on capital at 6% per annum and the losses for the year are 6,000. So in the second situation, we have losses given to us. So when we have a loss, let us try and remember where we write the losses and which type of an account we make. Let's just copy this format and paste it the next time. Okay, so the first thing I was asking is when we have a loss, we write it on the debit side. So over here, we will write to P&L account and we will write the loss. So what is our loss? Our loss given is 6,000. On the top, since we are writing a loss, we will not write appropriation. This will directly be written in the P&L account. So the P&L account, we have been told our loss is this much. Next, we are supposed to give mm, interest on capital, but we have a loss in there. So here we are told that interest on capital is given, but there are losses for the year. So in this case, how can we show this in the P&L appropriation account? We cannot give interest on capital because it is a loss. So here itself, in the P&L account, we are directly going to show our loss. So that will be P by net loss. So we will just write by net loss. And the amount will be divided in the ratio. So net loss transferred to X and Y and 6,000 into 2 upon 3, which makes it 4,000 and 6,000 into 1 upon 3, which makes it 2,000. So this comes out and total comes here. Let's see our answer. It says case 1, case 2, losses 4,000 and for Y it's 2,000. So this is our answer again, 4 and 2. The third one. Situation 3. Let's read it. It says if the partnership deed provides for interest on capital and the profits for the year are 9,000. So again, on the credit side, I'm going to write the profit. So it will be by P&L account. Amount given is 9,000. Then I have to provide for interest on capital at 6% per annum. So 6% on the capitals which are given to us. So 6 5s are 30. That makes it 3,000 and 1,800. That makes 4,800. Right. So to interest on capital, X and Y. This comes out as on 50,000 into amount is 6 upon 100, which is 3,000 and 30,000 into 6 upon 100, 1,800. This totals up to 4,800. Okay. Now we are left with a balance. This balance is going to come on the debit side, which is going to be a profit. So to profit transferred to X and Y. Amount left is 5,000. I think it's 4,200. So 4,200 into 2 by 3. Right? Let's try it. Those are 4,200 into 2 divided by 3 gives you 2,800, and 4,200 into 1 by 3, which is half of this, 1,400. So this comes out as 200, equaling to 9,000 and 9,000. Let us check our answer. So profit 28 and 1,400. That's what we said. So that's our answer. The next part 4. What does part 4 say? If the partnership deed provides for interest on capital at 6% per annum and the profits for the year are 3,000. Okay. So our profits are less this time. So let us write that much amount. So we have to get this. So I'm going to make a P&L appropriation, and we have been given our profits. So I'm going to write by P&L count. The amount given to us is 3,000. And we just saw that if we have to divide our profits, we will make this P&L account. So P&L appropriation account. So on the debit side, I am going to show the interest on capital being given. So interest on capital. For X, it is by default, it is saying when we calculated it, we saw the amounts were 3,000 and 1,800. So if I have to divide it into 3,000 and 1,800, I see that my debit side is coming more. My credit side is coming less. Because I have 3,000 here, but I have to distribute 4,800. Just like in the last question, this is what is being asked for us to do. So how can I distribute 4,800 if I only have 3,000 with me? So in this case, we divide it in the ratio of appropriations. Which is, as we saw on the top, 3,000 is to 1,800. Which is 6 5s are 30 and 6 3s are 18, which is 5 is to 3. So therefore, we will divide 3,000 now into 5 upon 8. Which is 1,875. And for Y, it is 3,000 into 3 by 8, which is 1,125. This totals up to be 3,000. So therefore, all our profit is shown that it is consumed and given to partners as interest on capital. So this should be answer 1,875 and 1,125, correct. The last part says if the partnership deed provides for interest on capital, even if it involves the firm to be in a loss and the profits for the year are 3,000. So let's see this type. for the fifth one. Even if it is in a loss, means which kind of an account will we make? Partnership deed provides for interest on capital, even if it involves the firm to be in loss, and the profits for the year 3,000. Okay, so profits given to us, we will write on the credit side. So as my first item, I will write by P and L account. Amount given to us is 3,000. And we are told we are supposed to give interest on capital at 6%. So to interest on capital, the amount for X and Y. So we know, we just calculated, here the amount was 3,000 and 1,800. So let's put it. I'm going to give it, this means. Because the question is saying we are supposed to give it, even if the firm incurs a loss. So this comes out as 4,800. So what is going to be our loss? Here we will write by loss transferred to the same partners, which is X and Y, and the difference is 1,800. So 1,800 into the ratio is 2:1, right? 2:1. So into 2 divided by 3. That is 1,200 and 1,800 into 1 divided by 3, which is 600. This totals up as 1,800. This gives us a total of 4,800 on both sides. So in this case, what have we done? In this case, we have made an account and we have in that shown a distribution of loss. So what you have to do over here is just make this into a P&L account. The reason for that is we normally don't show this kind of a loss in a P&L appropriation account. So we have started with the profit. So we make it shown in this account, P&L account on the credit side. We gave this as interest on capital. In this case, you can understand interest on capital to be a charge against profit. Because we are giving this, it's to be given. We cannot escape from not giving this. So we have given this as an expense for us. So this will come on the debit side in the P&L account. We are left with a balancing figure, which is again our loss, and that comes out to be on a credit side. So let's check our answer, 1,200 and 600. Yeah. That's it. All right. Let's go to another type of question. Let's try question 36. This PQ are partners of the firm sharing profits in 3:1. Their respective fixed capitals were 10 lakh and 6 lakh. Partnership deed provides for interest on capital at 12% per annum. Partnership deed further provided that interest will be allowed fully even if it results in a loss to the firm. The net profit of the firm calculated for the year ended 31st March 2018 was 1,50,000. Pass necessary journal entries in the books of the firm allowing interest on capital and the division of profit or loss among the partners. So we have to pass journal entries and show the division of profit and loss also among the partners. So in this case, we have them maintaining the methods of fixed capital. Thus, we will also use something like the current account because all transactions would be shown in that current account. So let's work on this. Right. This is question 36. P and Q are partners, 3:1. Fixed capitals for this. Partnership deed provides the interest on capital at 12% per annum. Okay, profits are given. So let's make a P and L account. Here we write by net profit. This is coming as 150. This is given to us. Now we are told we have to give interest on capital. So on 10 lakh, 12% will be 1,20,000. Partners are P and Q. So 2 interest on capital. I'm just making this account for us to understand it. 2 interest on capital, P and Q. Amount is 1,20,000. Similarly on 6, that makes it 72,000. So this comes out as 1,92,000. Now, what are we doing? We are having how much with us? We are having 1,50,000 with us, but we are distributing 1,92,000 to P and Q. So how much is the difference? The difference is 42. This difference we will show on the credit side. We will call this by loss transferred to each of these partners. So P's current account, the reason for that was because we were told fixed method. So P's current account, how much will we transfer? 42,000 into what's the ratio? 3:1. So into 3 divided by 4. 42,000 into 3 divided by 4, which is 31,500. And for Q's current account, we have 42,000 into 1 divided by 4. 10,500. This totals up to 42,000. And this totals up to 192. 192. So let's now write journal entries because the question asked us for journal entries. Thus, see here, our loss transferred to the current accounts is 31,500 and 10,500. Now we have to pass journal entries allowing interest on capital and the division of profit or loss. So definitely just post these entries and at the end of the year, show this in the P&L account because this has been given. That's all you have to do. So our first entry is P&L account debit to interest on capital. First, to make it due, what will we do? We have to give this to the partners. So interest on capital is an expense for us. So interest on capital account debit to partners capital account. So the first entry. Interest on capital account debit. How much are we giving? Okay, let's see. In total, we are giving 1,92,000 and the division of 120 and 72. So here, right, 1,92,000. 2 P's capital account 120 and Q's capital account 72. So being interest on capital allowed. The second one, profit and loss account debit to interest on capital account. So let's transfer all this amount into the profit and loss account. That makes it 192 and 192. Narration being the interest transfer to profit and loss account or closure of interest on capital account. The third one. Now what is happening? Now we are going to distribute this as loss. So when you have to distribute this as loss, we will debit the partner's current account. So the third entry becomes P's current account debit, Q's current account debit, and we saw the amounts were 31,500 and 10,500. Two P and L account. It was 41,500 in total. So being loss transferred to partners and how we transfer it in their current account. Okay, so these three entries we have to write over here. This should be our solution. Let's do another. This one can be done. 38 you can try. Let's try question 39. L and B are partners in a firm sharing profits in the ratio of 3:2. The fixed capitals on 1st April were L to be 1 lakh, B to be 2 lakh. They agreed to allow interest on capitals at 12% per annum and to charge on drawings at 15% per annum. The firm earned a profit before all the adjustments of 30,000 for the year ended 31st March. The drawings of L and B during the year were 3,000 and 5,000. Showing your calculations, prepare a P&L adjustment account, appropriation account of L and B. the interest on capital will be allowed even if the firms incur a loss. So let's make the P&L appropriation account. This was solution 39. So we have a profit of 30,000 before all the adjustments. So on the credit side, we will write by P and L count. Amount will be 30,000. Then we have to calculate interest on drawings because it is same. Firm allowed interest on capital at 12% and charged interest on drawings at 15% per annum. So for the first person, for L, it's 15% on 3,000. For the second person, it's 15% on 5,000. So how much is that? 15 threes are 45. So, okay, we have to do a calculation. Let's do it in short way by interest on drawings for L. The total drawings. His total drawings are 3,000. So 3,000 into the rate on 100. Rate is 15. Into the average period. Since we are not told anything, so we assume or we take or we calculate the interest on drawings average period. And for that, it comes out to be at the middle of every month, which is 6 upon 12. So if we multiply this, let's see how much we get. 3,000 into 15 into 6 divided by 1200, which is 225. And B. For B, it is 5,000 so 5,000 into 15 upon 100 into, again, the average period should be taken as 6 upon 12 because nothing is mentioned. So let's see how much this comes out as. 5,000 into 15 into 6 divided by 1200, which is 375. So 375 and 225, which is 600. Okay. On the debit side, let's not draw the line. Let's wait for some time. So on the debit side, I'm going to show two interest on capital. Again, for L. For L, it's going to be on 1 lakh. So on 1 lakh, you're going to calculate 12%. That is 12,000. So for L, it is 12,000. And for B, it is on 2 lakh, 12%. So 24. Now what's our total? This comes out as 36. But how can we give interest on capital of 36,000 and we have only 30,000 plus 600 with us? So the reason for this is because the question is saying that you make a P&L appropriation account and in that you also give interest on capital. So you're supposed to give it, even if there is a loss. That's what we're saying. So now we will have a difference or the balancing figure, which we will write on the debit side due to this. So by loss, because it's a balancing figure on the credit side, therefore it is a loss. So by loss transferred to L, again, this is, I think, fixed method. Yes, they are following fixed capitals. So L's current account, let's see what's the difference. 36,000 minus 30,600, which is 5,400. So L's current account will be 5,400, which is the balancing figure, multiplied by the ratio in which we have to divide. The ratio is 3:2. So into 3 divided by 5. Correct? 5,400 into 3 divided by 5, which is 3240. 3240. So else is done. B's current account 5,400 into 2 divided by 5. 2160. We total this 2160 plus 3240. That comes out as 5,400. So our total figure is 36,000 on both sides. And 3240 and 2160 should be our amounts of the losses. 3240 and 2160. That's our answer. And we transferred them to the current account of these two partners. So this was the topic which we wanted to finish off with. Now, let us discuss the next topic. The next is going to be about guarantee of profits. Okay. So, what do you understand by guarantee? Guarantee means an assurance. So, this assurance is given of the profits, assurance of profits. You can say this is. So, if you're giving an assurance of profits, to who can this be given? This can be given to a partner, by another partner. So, one partner can give this guarantee that he will earn a profit of whatever amount in a particular year. So, what happens in that case? If this partner who is promised to earn this much profit does not get it by way of the appropriation account, then in that case, we are supposed to take it from the partner who promised it. Okay, so let's say, for example, there are two partners, X and Y. X is giving a promise to Y that Y will get a profit of 1 lakh. At least, profit of at least. Okay. So if X is giving this promise to Y, that he will earn a profit of at least 1 lakh. And in the current year, when you calculate the profit through the P&L appropriation account, if Y doesn't have an amount equaling to 1 lakh, then in that case, that amount of difference will be taken from X because X has promised it. So one partner can guarantee to another partner. Okay. What is another way in which guarantee can be given? Another case can be a partner guaranteeing to the firm. Okay. A partner guaranteeing to the firm. So the same situation, we can consider X and the firm. So at times what happens? The partner is giving this guarantee to the firm that in case the firm is not able to earn a total of whatever amount in the current year, that difference will be paid by the partner. So X is giving the promise or the assurance to the firm that in case the guarantee is not fulfilled, then X will be paying that difference amount. So this is the second type of a guarantee. Okay. So let's study this with some questions and let's see how we solve questions when we have this difference arising. So let's take question 67. Let's try question 67. This says ABC, just a minute. It says ABC are partners in a firm. The profit sharing ratio is 3:2:1. However, C is guaranteed a minimum amount of 10,000 as share of profits every year. Any deficiency arising on that account shall be met by A. Okay, so you have three partners in the firm. This is solution 67. Let's try. Three partners, profit sharing is 3:1. A is to B is to C equals 3 is to 2 is to 1. This is given to us. However, C is guaranteed a minimum amount of 10,000 as share of profit every year. C is guaranteed a minimum amount. Above this, he can earn how much ever he can be given profit. But at least he is guaranteed a profit of 10,000. 10,000 profit. This is guaranteed. Any deficiency, it says, arising on that account shall be met by A. So if there is anything less that he earns, then that will be provided by A. So A is the person who has to be paying up for any difference or any shortage in the profit of 10,000 that he gets. So what happens after that? The profits for the 2 years ending 31st March 23 and 24 were 30,000 and 90. Prepare the P&L appropriation account for the 2 years. So for the first year, it's 30,000 and for the second year, it's 90,000. So let's prepare. Here we have a profit of 30,000. So I will write by P&L account. The amount is 30,000. There is nothing being spoken of any appropriation. So let's divide this into the ratio. So 2, here I will write profit transferred to A, B, and C. A, B, and C. Now how much goes to A? A will get on 30,000, 30,000 into 3 divided by 6, which is 15,000. So A gets 15,000, B gets 10,000, C gets 5,000. This is their profit. But what was the promise made? Promise was that C would get a profit of at least 10,000. So how are we going to give this to C? Definitely we will have to add this. So I will write plus 5,000. And who is going to pay this? A is going to pay this. So minus 5,000. So what is my final amount? For A, it is going to be 10,000. For B, it is going to be 10,000 as it is. And for C, it is going to be 10,000. So altogether on the outside, in the outer column, we will have 30,000. But what has happened? We adjusted these amounts. So here we will write 30,000. And here also, it's coming as 30,000. So the question asked us to make this P&L appropriation account, and through that, we have to show how much is being going into whichever person's account. Okay, let's try another question. Part 2. Part 2 is talking about a profit of 90,000. So again, let's make a P&L appropriation account. A debit, a credit. By profit 90,000. This is from your P&L account. Now, if you have to divide this, there is no appropriations, simply divide this. So 2 profit transferred to for A 90,000 if I have to divide into 3 divided by 6 gives you 45. So 45,000, B gets 30,000 and C gets 1, that means 15. This totals up to 90,000 again. Just a minute. And 90,000. Okay, so in this case, C is getting 15,000 and his minimum was 10,000. So we don't need to change this because he's at least getting 10,000. The others will also remain, we'll also keep as the same. So 45, 30, and 15. These should be our answers. 45, 30, and 15. And in the first year, 10,000 each. Okay. Let's take another question. Let's try 67B. So what does the question say? It says XYZ are partners with capitals of 4, 3, and 2. They charge 8% interest on capitals and they divide the profits in the ratio 3 to 1. X is guaranteed that Z share shall not amount to less than 50,000 in any 1 year. X is guaranteeing. So one partner is guaranteeing for another partner. The drawings during the year were 50, 40, and 35. Net profit for the year before providing interest was 252. Prepare P&L appropriation account and capital accounts. So let's make the P&L appropriation account. My P&L account amount is 252. Next, it says, let's take all our appropriations if there are. So we have been told an appropriation of 8% interest on capital. So 8 fours are 32, 8 threes are 24, and 8 twos are 16. 32, 24, and 16. So 2 interest on capital. X, Y, and Z. So 32, Y is 24, and Z 16. So this makes it 40, 50, 60, 72. 72,000 in total. Interest on capital. What else is given? Divide the profits in the ratio 3 to 1. X is guaranteed that Z's share not be less than 50 in a year. Okay, the drawings during the year were 50, 40, and 35 respectively. Okay, so we don't have to do anything about the drawings over here because it's not been given in percentage. So we don't have to charge. Interest on drawings will not be charged if it's not mentioned in the partnership deed. So it is not mentioned. Now let's take this and divide it into our profits. So what are our profits? Here we will have a difference left on the debit side. So here I will call this to profit transferred to X, Y, and Z. So X, Y, and Z. For X, it is going to be, let's find the total difference first. So 252 minus 72. 180. So our total figure is 180, which is our divisible profit. I'm just writing it here. This 180 now we have to divide between X, Y, and Z. Okay. So how much is each of them going to get? We know our profit sharing ratio is 3 to 1. So let's divide it in 3 is to 2 is to 1. So for X, it's 180 into 3 divided by 6, which is 90. For Y, it is 60. For Z should be 30. So these are our profits. Now, what are we also told? X has guaranteed that Z share shall not be less than 50,000 in any 1 year. Okay, so X is guaranteed for Z. That is to say, X is saying, I guarantee Z. So this should be 50,000. So if I make this 50,000, I can only make it if I add. I add 20,000 here. So this 20,000 is going to come from X. So if this 20,000 comes here, this becomes 50. And over here, I put minus 20,000. So this will become 70,000. Therefore, my amounts will be X is 90,000 minus 20,000, which is 70,000. Y is 60,000 and Z is 30,000. Plus 20,000, which is 50,000. Now, total figure comes out as 180. Sorry, our total figure is not 180, it is 252. So this is our working. Let's take it and put it down. Similarly, on the credit side, we will write our total figure. Let's check our answer. Our answer is A, B, C were partners. Okay, sorry. X, Y, Z. So we have 70, 60, and 50. That is our answer. 70, 60, and 50. That's what we just calculated. 70, 60, and 50. Well, that's nice. Let's go to another question. Let's try question 69. Okay, let's see question 69. This is ABC are partners sharing profits and losses in the ratio 3:2:1. The capitals on 1st April were 5, 3, and 2. A had personally guaranteed that in any year, C's share of profit, after allowing interest on capital to all the partners at 8% per annum and charging interest on drawings, will not be less than 1 lakh. Net profit for the year before allowing or charging any interest amounted to 4 lakh 32. A has withdrawn 5,000 at the end of every month. B so and so, and C is also withdrawn some amount. Prepare P&L appropriation account for the year. Okay, I just remembered in the previous question we also had to make a capital account, I guess. Let's finish that also. So prepare P&L appropriation and the capital accounts. Well, it's, I think, simple. What we need to do is in the capital account, the only additional thing will be about mentioning the drawings. So let's do it quickly for the sake of completion. So partners, capital accounts. X, Y, and Z. X, Y, and Z. Okay, so on the credit side, the first item we will write will be by balance. Brought down. Amounts would be 4, 3, and 2. Then what else? Just write what we just wrote some time back. So we showed interest on capital 32, 24, and 16. So interest on capital will come on the credit side. So we write by interest on capital 32, 24, 16. What else? We were told drawings 50, 40, 35. Drawings come on the debit side. So two drawings, 50, 40, 35. And we spoke about partners balance, which we are sending into the profit as profits. So 70, 60, and 50. So here you take the correct amounts when you're entering 70, 60, and 50. Profits, again, they will come on the credit side in this. So by P&L, appropriation, account 70, 60, and 50. So nothing else. Let's total it and get our balancing figure. So credit side 4 lakh 32 plus 70 makes it 5 lakh 2,000. This comes out as 3 lakh 84,000. And the last comes out as 2 lakh 66,000. Totals will come on the other side. So 5 lakh 2, 384, and 266. Just minus the amounts given in the debit side, you'll get your balancing figure. So to balance, carried down. This is our balancing figure or our closing balance. It's a closing credit balance. So the amount is 502 minus 50 makes it 452. 384 minus 40 makes it 344. 266 minus 35. 231. Was our questioning mentioning this? I don't suppose our question mentioned it. Yeah, so but still, you made it. That's the correct capital account. Now let's go back to the next question which we were to start. So that was solution 69. This is ABC are partners sharing profits and losses in 3:2:1. Okay. We are supposed to make a P&L appropriation account, just the P&L appropriation account. So debit credit. Here on the credit side, we are going to write items. So by P&L account, how much is our profit? We're getting back a profit of 432. The net profit before 432. So I will write 432. Then let's give interest on capital. So at 8%, we're going to charge on 5 lakh. Again, 8% on 3 lakh and 8% on 2 lakh. So 8 5s are 40. So 2 interest on capital for A. So 8 5s are 40. So that makes it 40,000. B. 8 3s are 24. And C. 8 2s are 16. So 16 and 24, 40, 40, 40, 80. Then you have to give interest or charge interest on drawings. So it is to be charged at 10%. So by interest on drawings. So the drawings for A is 5,000 at the end of every month. So interest on drawings is total drawings, which is 60,000 into the rate upon 100, 10 upon 100 into the average period. End of every month means time left after the first drawing, 11 plus time left after the last drawings, which is 0 divided by 2. The whole thing divided by 12. So 60,000 into 10 into 5.5 divided by 1200, which is 2750. So for A it is 2750. For B, 15,000 at the end of every quarter. That means 60,000 at the end of the year. So per year, for the second person, it's 60,000 into 10 upon 100 into the average period. The average period is what is changing. So at the end of every quarter means time left after the first drawings is 9 months. Time left after the last drawings is 0 divided by 2. And this whole thing divided by 12. So 60,000 into 10 into 4.5 divided by 1200. That is 2250. And for C it is again 60,000 into 10 upon 100 into 6 upon 12. Again, we are going to consider this to be at the middle of every month. 60,000 into 60 divided by 1200. plus 3,000. We total it 3,000 plus 2,250 plus 2,750, 8,000. So this comes out as 8,000. Okay. So we have a balance left on the debit side. So I will call this to profit transfer to A. How much goes to A now? What's the difference? 440 minus 80. The difference of the two sides, that is the balancing figure, is 440 minus 80,000, which is 360. Now 360 I have to divide in 3:2:1. That's what is given to me. So let's divide that. So if I do my calculation in rough, it comes out as this is my divisible profit. And I'm saying I'm going to divide this. So for A, it is 360 into 3 divided by 6. Which is 180. For B, it is 360 2 by 6. $120. And for C, 360 into 1 by 6, which is 60. Okay. And what is the question saying? A personally guaranteed, but C in any year will have at least 1 lakh. So if A is guaranteeing, and that is also being said that after allowing interest in capital to the partners and charging interest on drawings. So that means after all these appropriations, in making our P&L appropriation account, when we are done with all the appropriations and we have written all our incomes, A will not get less than 1 lakh. But let's see how much is A getting. Sorry, C. C is not getting less than 1 lakh. So C should get at least 1 lakh. So he is short of 40,000. So this then will come 1 lakh. Okay. And who's going to get this? This is going to go from A. So here we are going to show minus 40,000. This comes out then to be 1 lakh 40,000. So if you add all this 140 plus 120 plus 1, that gives you 360. So what we have to write here? To profit transfer to A, it is 180 minus 40, which is 140. B, B remains the same. So B's is 120. And C's, this becomes 60 plus 40, which is 100. And all this becomes 360. Okay. This totals up as 360 plus 80, 440. And 440. So what is our answer? Our answer is share of profit of A is 140, B is 120, C is 1 lakh, which is the same 140, 120, and 1 lakh. So that is our answer. Let's go to another question. Directors of the firm distributed profits for the year 115, the ratio 2 is to 2 is to 1 without providing for the following adjustments. Okay, so these partners distributed their profits without these following adjustments. We are supposed to pass the journal entry for the above adjustments in the books of the firm. So this is just like past adjustments, plus it is also guaranteeing a profit. In point 3, it is saying one person is getting a guaranteed minimum profit. So let's try question 70. We have to pass the adjustment entry. So in our working, first we will take back whatever profit we have distributed. So 150 in the ratio of 2 to 1, we have to take back from these partners. So profit of 1 lakh 50 in 2, 2, 1, debit. We have debited. So let's see how much it is. 2 divided by 5, which comes out as 60,000. Again 60,000 and 30,000. When we debited it, that means we are taking it back. We are talking in terms of the partnerships, partners, capital accounts. So we have to remove it. Profits are taken back, so we are debiting it. Next one. Now, A and B were entitled to a salary of 1,500 per quarter. A and B. So give these salaries salary credit 1,500 per quarter. So 6,000 and 6,000. Then C is entitled to a commission of 18,000. Commission. A and C have guaranteed a minimum profit of 50,000 per annum to B. Okay, so first let us see how much is this. Correct profit. Correct divisible profit. Correct divisible profit is 60, 60. 120, 120 plus 30, 150. So 150 minus 6 and 6 is 12 minus 18. 150 minus 12 minus 18. Which is 120. So 120 in again we are dividing it, so we are giving it, just crediting. So 120 into 2 divided by 5, 48,000. Again 48,000 and 124. Right? Yeah, so 48 makes it 96 and 24 makes it 120. Now this is gone. So if we add this, instead, I think we'll make this into the account because then we can get our current profit and add it back. That'll be easier to understand. So just along with this, just see what I'm doing. I'm doing it in short. P&L appropriation account. Here I write by net profit or P&L account. So we have this as 180. Then we had 2 salary and 2 commission. Salary amounts were 12 and commission was 18. You're left with a difference of 150, right? Right or wrong? 12 minus 18, right? 150, 180. Yeah, there we made a mistake. So here it is. $150. So to profit transfer to, you have partners by the names A, B, and C, right? So A, B, and C. So A, B, and C. A, we will give 120. So we just calculated it was 48, 48, 24. So let's write 48. 48, 24. And it is saying A and C had guaranteed a minimum profit of 50 to B. So B is supposed to get 50. So how much will I give him extra? I will give him 2,000 extra. Where will I take this 2,000 from? So this 2,000 will be taken from A and C. So A will give of 2,000. We know that the ratio is 2 is to 2 is to 1. A is to B is to C equals 2:2:1. So when we are talking about A and C, the ratio is 2:1. So you will multiply into 2 divided by 3. So how much is this? Okay. Another thing. Profits were to be shared in the ratio of 3:3:2. It's not 2:2:1. So there is also going to be this difference. These amounts will also change, I guess. Yeah. When you have to divide it in this new ratio, then these will also change. So here also it will be different. So it's basically 120 in I think it's 3:3:2. Yeah. 3:2. So what is the amount? A and C's ratio together, if you consider this, it's going to be 3:2. So into, first let's calculate how much is our profit. So we know 120 is the amount. So 120 into 3 and 3, 6 and to 8. 3 divided by 8, just 45,000. So here it is 45, 45, 30. Okay. Now we know B is guaranteed a profit of 50,000. So here I'm going to add another 5,000. Therefore, how much is this A going to give of 5,000? How much is A going to give of 5,000? We know that the deficiency is 5,000. So of 5,000, A is going to get give 3 upon 5. So into 3 upon 5, because the ratio is 3:2 between A and C. So 5,000 into 3 upon 5. That comes out as 3,000. And similarly, B is going to give 5,000 into 2 upon 5, 2,000. So here I'm going to subtract 3,000, and here I'm going to subtract 2,000. So my final answer is 42. Here I'm going to write 50, and here I'm going to write 28. Okay. And these three total up to 120. Okay. This totals up to a total which is 150. Now, since we have to make the single entry, so here just let's change this language. It is correct divisible profit divided in 3:3:2, and Here we will also write after fulfilling guarantee. For this, you can write working note 2. So basically, this is working note 1. And to calculate working note 1, we made working note 2. These are ways of solving this simply. So use these methods, and here the amounts will be 42, 50, and 28. So here let's put the amount. I guess it should be in white. 42, 50, 28. Let's calculate our final effect. So vertically, if we add this, it's 42 plus 6 makes it 48. 48 minus 60 is at minus 12. So it'll be debit because it is a minus figure. 50 and 6 is 56 minus 60 makes it minus 4. Again, this is going to be a minus figure, so debit. The last one is going to be 28 plus 18 minus 30. So 28 plus 18 makes it 28, 38, 48. 48 minus 2 is 46. 46 minus 30 is 16. And this will be plus, so it's credit. So our entry becomes A is capital account debit, 12,000, B's capital account 4,000, to C's capital account 16,000. So A's capital account debit 12,000, B's capital account debit 4,000, to C's capital account 16,000. Narration is being error rectified. Let's see our answer. A's, B's to C's. This is our final answer. Good. Let's try one more question. It says X and Y were sharing profits in the ratio 2:1. On 1st April, they admitted Z for 1/4 share in the profits. Z is guaranteed a minimum profit of 1 lakh in the year. Any deficiency in Z's share is to be borne by X and Y in the ratio of 3:2. Loss for the year amounted to 120. Record the necessary entries. Okay, so two partners, their ratio is 2:1. They admit a new partner, Z, 1/4 share in the profits. Who gets a minimum profit of 1 lakh a year? Deficiency in Z's share is borne by X and Y in the ratio of 3:2. Loss for the year amounts to 120. Ask the necessary entries. So this is a question where you are saying there are no appropriations. New partner is entering. The previous, let's work it out on paper and then let's discuss. So solution 71. So you have two partners, X and Y, 2:1. X is to Y equals 2:1. This is what is given to us. The new partner Z, 1/4 is his share. Okay. Z is guaranteed minimum profit of 1 lakh for the year. And this is borne by X and Y in the ratio 3:2. Profit 1 lakh. Borne by X and Y in 3:2. Losses are given as 120. Okay, so let's analyze what is given to us. We are told XY is 2:1 and Z is 1/4. So basically, this is meaning that the ratio of X, Y, and Z becomes 2:1:1. So when they join together, when admitted, the combined, it implies the combined ratio is 2:1:1. The reason for this is because in this case, we are told Z's share is come out as 1/4. So this will only be possible if we consider the ratio 2:1:1, because in this case, Z share will be 1/4. If you take out the fraction, that's what we will get. What else is told to us? We have to pass the entries. Your total losses are amounting to 120. All right. So this means that the question is saying we have made a loss for the year. So in that case, let's make a P&L account, because in a loss we cannot make a P&L appropriation. So we have a P&L account, debit, credit, and we have a loss written on the debit side. So it's two loss. Amount given to us as the loss figure is 1,20,000. So if I have to divide this loss now, there are no appropriations in this question. So if I have to divide this loss, I would write by loss transferred to X, Y, and Z. X, Y, and Z. And in which ratio we are giving it? We have to divide it in 2:1:1, the one that we just saw above, which we worked out. So 120 into 2 divided by 4 comes out as 60,000. 30,000 and 30,000. This totals up as 60 and 60. 120. Just a minute. Okay. So let's try and understand what is happening here. This will be our division of loss. But now what is the question saying? The question is saying that somebody is guaranteed a profit. That somebody is Z. So if you're saying Z is to get a minimum profit of 1 lakh for the year, and the whole business is made a loss. So Z, let's write Z's case. Make it on a timeline. So Z has made a loss, and the loss is of 30,000. I just saw on the top. Z has made a loss of 30,000. And we are saying that he is to get a profit of 1 lakh for the year. So 30,000 is a loss, which is a minus figure. Okay. We have to go in the positive direction. So where will zero be? Let's say zero is here. Okay. This is zero. We will have to still keep going in order to give him a profit of 1 lakh. So in order to give him a profit of 1 lakh, I will have to still keep going until and unless I reach here. Let's assume this place is 1 lakh. So what have I actually given to him? I'm talking about Z. So I've actually given him from 30,000 in minus, from minus 30 to 0, I've given him 30,000. From 0 till 150, 151, I've given him 1 lakh. So altogether, I'm going to give him 1,30,000. This is what this means. And the second thing given in the question is any deficiency in this will be borne by X and Y in the ratio of 3:2. So therefore, over here now, I have to write 1,30,000. 1,30,000 in 3:2. Therefore, A gives 1,30,000, not A, X. I'm supposed to write X. 3/5, which is 78,000. And Y is going to give 130 into 2/5, which is 52,000. Okay. So this is what is going to happen. And Z will get. So from X you're taking. From Y you're taking. And Z you're giving how much? 130 in order to make his profit equal to 1 lakh. So giving. The question is saying record the necessary entries. So the first entry which you have to record is about this loss. So when you have to record this loss, what are you going to write? X's capital account debit, Y's capital account debit, Z's capital account debit to P&L account. So we will have two entries. So journal entries. Since you have two. So the first is X's capital account debit, Y's capital account debit, Z's capital account debit to P&L account. Amount was in the account 1,20,000. So 60, 30, 30. This is 1,20,000. So 60, 30, sorry, not 6 lakh. Achha, it is 60 only. 30 and another 30. Here the narration will be being loss transferred to partners. And the second entry is about the deficiency. So here you're going to look at this, what you just wrote. Sometime back we wrote this. It was X was taking, from X we are taking 78, from Y we are taking 52, and to Z if we are giving 130. So our entry will be X's capital account debit, X's capital account debit, Y's capital account debit to Z's capital account. The amount is 130, and here it will be 78 and 52. I guess these were the amounts we calculated. Yes, 78, 52. And the narration will be being deficiency fulfilled of Z by X and Y. Okay, so these two should be your answers. So the answer, it says, first of all, the loss of 120 will be debited to XYZ in the new profit sharing ratio of 2:1:1. And then Z's deficiency of 130 will be born in 3:2. So this is the answer. Correct. So this is our answer. All right, students. So you can try the next question also. We will stop for now. And I wish you all the best in trying all these questions, going through this concept again. It's not a difficult concept of guarantee of profits. A simple, straightforward concept of just using all the knowledge we have of this chapter in the past, whichever we have learned. So we'll stop here. Do like, do share, do subscribe to this channel. Share this video definitely with your friends. Help them to understand this topic as well as the previous topics. All the best.